let's look at Ethereum Classic. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. There's been a huge move in cryptos again. I thought that maybe there would be a little bit of a break, but it's off to the races. You see here, if you look at the megatrends, here is the blockchain portfolio, because there are ways to get exposure to cryptocurrencies through publicly listed companies. It is the top performing of all the megatrends, approaching 2,000% from the 52-week lows. So the bulls are definitively very much in aggro mode. If you look here at Ethereum Classic's website, so there is this distinction between Ethereum and Ethereum Classic. So Ethereum Classic provides a permissionless way to manage digital assets without the need for intermediaries, such as banks and other institutions. It allows uncensorable smart contracts to be written, deployed, and executed. It is a truly unstoppable programmable money. It is the continuation of the unaltered history here, and of course they do put it in italics, of the original Ethereum chain. The ETC network exists to preserve the principle of code is law. Okay, we do not have any seasonality for Ethereum Classic, so we can't really get into that, but we do have the chart. And one of the reasons why I think Ethereum Classic is interesting now is because it hasn't had that monstrous run that we have seen in some of the other cryptocurrencies. We will look at some of the other ones soon, but let's first have a look at Ethereum Classic, because the key thing, is to buy low and sell high. And given that there is a push for institutions to get into the entire, cryptocurrency market, they are more likely to get into those that are at a more reasonable price than those who are roaring, hundreds of percent away from, the 200-day moving average as an example. Okay, so yeah, this is where you have the major crash, but you can see that there's been a major sentiment change, and we have basically been consolidating here. Certainly seems to be a floor in place. What is especially interesting now is the current level. You see this black line that is being drawn. So we have these support levels back here. There's a bunch of support for the current level. You could make a strong case that we have an inverse head and shoulders pattern. So you have a shoulder, and then you have a head, and then you have a shoulder. That is a key bullish pattern. So we are very close to a breakout. RSI is at a reasonable level. We have minus 28% correlation here with S&P 500. Let's quickly look at the daily data points. Then we have 82% positive. Let's now look at the correlation here with Bitcoin. So let's take the Bitcoin index like that. Okay, so here we have, so long term we virtually have no correlation whatsoever with Bitcoin. So it's around minus 2%, so basically just flat and nothing. Looking at the shorter time frame, there is 89% positive. So there certainly has been a bit of a change. Okay, let's get back here to the S&P. Okay, so you see that we are very close to a breakout. If you look here at the daily data points, let's zoom out a bit to get, you can see very clearly this black line, support back here, support here. There's so many support levels at the current level, hence you do have that floor in place. That's rather interesting. The RSI is basically, very close here to the neutral zone, like 54, like a nice level. There's nothing problematic here about the PPO either. We have seen the prior, big rallies, they have gone way higher. The same with the RSI. So basically the bulls have just a very nice setup to rally from here. So yeah, this looks good. We do have a clear floor in place. Of course, it is fully possible that the bears are going to just smash through that floor, and that would be an issue. But as it looks now, you do have a golden cross here, 50-day above the 200-day. The 200-day moving average is now pointing upwards. It's a lot of constructive developments here. So let's now look at some other cryptocurrencies as well. So long term, I do feel bullish about this pair. Looking at the shorter time frame as well, weeks and months. The bulls, they have it. They have the ball in their court. They can, of course, mess it up. That is possible, but they have such a nice setup. So let's look at Bitcoin. Let's take the index. So we did have this top back here. We have seen a relatively interesting recovery. Let's get a bit more nuance here on the daily data points. I mean, you could argue that this is a bit of a double-ish bottom. You could make some case of an inverse head and shoulders pattern here. The problem is that the right shoulder is significantly lower than the left, so it's not an ideal pattern. But you do see here support, boom boom, at the 50-day moving average, a very key level. RSI has cooled down a bit, so it's looking okay. But I think that we shouldn't have had this euphoric rally in the first place. I'm a huge fan of tactical, the more tactical side of investing, and that would be something more like this. But Bitcoin decided to have another of those euphoric rallies. And the reason why I don't like it is because Bitcoin has such a terrible history with these kinds of moves. But given that there is this push for institutions to get into this market, that increases the likelihood that it will not result in some major crash again, like we have seen in the past. But ideally, everything in moderation. So let's look at Ripple. Ripple, it's what? Here we have Ripple. We did have that major crash due to the investigation, and that is a bit of a warning as well. It does show us that these cryptocurrencies are very sensitive to what the establishment does. So this could happen to other cryptocurrencies as well. We are seeing some attempts at recovery. It is interesting that we did find support here at the blue 100-day moving average. There is some history here in the past of it functioning as a support level. So that's interesting. Let's look at Monero. So here is the Monero index. See this? Let's look actually here at the daily data points. So this is the kind of price action that I think is more healthy. It moves in these waves. You have these frequent pullbacks. But there is a risk, of course, also with having these pullbacks, because here we have test 100-day moving average in blue, test, and when you test it too many times, then there certainly is the risk of this happening where it actually breaks. But it seems like we have been able to get above it again and use it as a support level. But you do have this situation here with lower lows. And this rally here is, of course, to be determined. What I find, potentially a bit ominous here is that if you look at this pattern, you see that it is a bit too similar to this pattern back here, which it did become a problem. So the bulls, they cannot dilly-dally here. They really need to get into business. Okay. I think that there are very interesting times here for the crypto market going forward, but I think that we need to be quite aware of the risk of regulation and that these cryptos are sensitive to it. I think that is the primary lesson here from what happened to Ripple. Even though there could be some stormy weather in the future, I do think that long term, looking years into the future, I'm definitively very bullish on cryptos.